Today is going to be exciting because we're diving into recent data showing how NIO stock has been exhibiting lower volatility than the broader market. Stick around because we're going to unveil a super profitable trading strategy, and we're eager to share how it can work wonders for you too. So, how can you turn NIO stability into consistent gains?
Yeah, let's take a look at the results here. An adjusted loss per share of 2 yuan and 67 cents. That's more than what the street had been expecting of 2 yuan and 53 cents. And when you look to the future, this current quarter, revenues and delivery numbers are lower than what the street expects. So that adds up to a kind of grim year, these set of quarters that NIO has been putting investors through, which is worse than expected and missing on the expectations. And this is an Chinese EV startup which is still yet to make money ultimately, and has been going through what feels like a lot of challenges of late as some of its nearer competitors find their feet and gather momentum.
First, let's take a look at how NIO has embarked on a roller coaster journey in the stock market, going from the highs of a staggering 1,500% increase to grappling with significant declines. Currently trading around $9.50, NIO's trajectory, once promising, has hit troubled waters. NIO's initial success was marred by challenges, particularly in meeting investors' expectations. A pivotal factor contributing to its recent struggles lies in the underwhelming performance of vehicle deliveries. In the third quarter of 2023, a substantial 10% drop in deliveries compared to the previous quarter raised concerns. The intricate web of disruptions in the supply chain, production difficulties, and intensified competition from rival electric vehicle makers played a role in this downturn. The challenges NIO faces symbolize the broader challenges in the crowded electric vehicle market. The industry-wide trend of resorting to price cuts for a competitive edge has compelled NIO to follow suit, resulting in diminished gross margins and profitability. In addition, the company's recent move to issue $1 billion in convertible bonds in September 2023 aimed at raising capital without diluting existing shareholders' equity. But it also introduced potential dilution concerns for the future, impacting the stock price. Despite being recognized as an innovative EV company with cutting-edge battery swapping technology and a compelling lineup of vehicles, NIO's outlook is no longer as optimistic. The company grapples with significant debt, currently standing at $4.2 billion, coupled with the headwinds of a slowing Chinese economy and squeezed profit margins. However, analysts foresee a moderate annual forward revenue growth of 26.1% and a promising operating cash flow growth of 61.3%. NIO's price-to-sales ratio of 2.1 remains notably lower than that of competitors like Tesla. Pulling back earlier this year, how did NIO maneuver through its stock trajectory? After a period of consolidation, a clear uptrend emerged, showcasing the advantageous nature of predictable price action. Investors keen on stable periods found a profitable avenue through option selling, leveraging NIO's consistent performance. During this stable phase, understanding the nuances of option trading proved dominant for maximizing gains. The data supports this strategy, revealing that the stock's predictable movements created a favorable environment for option sellers. This isn't just about stock movements, it's about recognizing the patterns allowing strategic options trading. So, given NIO's performance and recent numbers, what's the secret sauce to navigating the market? Well, let's dive into the concept of the Sharpe ratio. This metric becomes the guiding light for investors, steering clear of big portfolio swings. By avoiding these wild market gyrations, investors and analysts have crafted a strategy that stands out when scrutinizing portfolio performance relative to the market. The numbers don't lie, and during times of upheaval, while others experience significant swings, these investors' portfolios remain remarkably stable. Now, let's talk about the long-term game. Emphasizing the importance of consistent returns isn't just a catchphrase, but a proven strategy. Their portfolio isn't just about flashy gains, but a steady climb. And the statistics back it up, showcasing the power of this approach over time. But before we continue, we really want to thank you for watching this far. This year was also great for NIO, not just in stock trends, but notably in electric vehicle deliveries. NIO hit a significant milestone, delivering over 55,000 vehicles in Q3, showcasing the company's continued growth in the EV market. Now, NIO's valuation is turning heads, and for good reason. Despite recent market fluctuations, the company's attractiveness is evident in its price-to-sales ratio, a key indicator for investors. At 2.1, NIO's ratio is notably competitive, highlighting the company's financial health and market positioning. Comparing NIO's price-to-sales ratio with other industry players further reinforces its appeal. In a landscape where every digit matters, NIO holds its ground against competitors, showcasing strength and resilience. Addressing concerns related to NIO's Chinese origin is crucial. While geopolitical considerations may spark worries, separating the noise from the signal is essential. NIO's commitment to innovation and its presence in the global market should be factored into the assessment, highlighting the company's potential beyond national borders.
So I'm all international and emerging markets in particular. In fact, I'm speaking to you today from Korea, and we have quite a lot of investments here in Korea. And a few weeks ago, I was in Taiwan. So Taiwan and Korea are really at the top of our list, in addition to India. Those are the three places where we're focusing. But now we're looking at China in very specific ways, and particularly looking at Hong Kong listed companies, because those are the companies that are, in terms of valuation, look very attractive. But China is still, as you know, going through a tremendous adjustment, and it's going to be very difficult for many companies. And in fact, one of the things I'm learning here in Korea and in Taiwan is that these companies are also being challenged because a lot of their exports go to China. And of course, they want China to thrive, but at the same time, they have to diversify their markets so that they're not so dependent upon China.
Another great thing about NIO is that it advocates for diversification beyond the U.S. market. Looking at other investors' experiences sheds light on the value of international travel and exposure to global economies. These experiences emphasize the need to balance risk and opportunity in different regions, moving beyond the comfort of traditional markets. Diving into real data and statistics, the importance of considering alternatives becomes evident. Investors who ventured into global markets found new opportunities and a shield against potential downturns in a single market. It's not just about the risk, but about recognizing the vast array of opportunities beyond familiar territories. Balancing the investment portfolio with a global perspective isn't a mere trend, it's a strategic move backed by numbers. The data supports the notion that considering alternatives beyond traditional markets isn't just a choice, but necessary for a well-rounded and resilient investment strategy.
Either for hedging or for speculation, but also a very significant percent of the volume is investors selling these options for income generation. So that diversity of use case, again, is why the flow in the zero-day options is so balanced, and why we continue to see, very robust flow in zero-day options, regardless of what the market is doing.
So now, what is the best strategy for consistent income with NIO stock? Let's delve into the world of selling puts. The wheel strategy takes center stage, presenting a structured approach that aligns perfectly with NIO's consistent performance. Breaking it down, the wheel strategy involves selling puts on NIO, aiming for consistent income through strategic options trading. The key lies in selecting the right strike prices and expiration dates. It's not about navigating complexities, but about understanding and leveraging NIO's trends for optimal returns. In real-world examples, let's look at actual option trades on NIO. The data reveals the effectiveness of selling puts, showcasing returns that add up over time. This isn't about a buzz strategy, but a proven method that aligns with NIO's stable trajectory. Understanding the mechanics of selling puts, applying the wheel strategy, and strategically choosing strike prices and expiration dates become the tools in an investor's kit. The statistics validate this approach, highlighting the potential for consistent income with NIO. So, as you analyze the strategies we've showed you, it's time to consider implementing them in your own investment journey. The data and real-world examples have showcased the potential of selling puts, applying the wheel strategy, and strategically selecting strike prices and expiration dates, particularly in the context of NIO's consistent performance. Don't just stop at understanding, venture into the world of options trading with NIO. The statistics speak volumes about the effectiveness of these strategies, turning the theoretical into tangible returns. Will you embrace these proven methods to potentially transform NIO's stability into a consistent income stream? The data says it's a compelling proposition. And now, the question is, are you ready to capitalize on it? Share your perspective in the comments below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, I highly recommend watching this fantastic video if you want to know more investing in NIO using cash burn strategies. Just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.